Peter Eliades with you online, doing this update on October 2nd afternoon, going on about, we're starting to record it around 5 p.m. Pacific time. Probably won't be on for another 30 or 45 minutes by the time we get through preparing the tape. But this is going to be a stream of consciousness video. We're going to move around to a lot of areas. If you're not really interested in the technical side of the market or in price projections, then you're probably not going to be interested at all in this update. If you are interested in those things, I think you might be fascinated. So for those of you that are, hang around and let's see what we come up with. We did a special update today, and in fact, at the end of yesterday's regular update, we pointed out what happened in the advanced decline line. It had broken above a channel. Now, mind you, this is not a 6-month channel or a 3 or 4 month or whatever. This is an 8-year channel in the daily AD line that goes back to October 11th, or the October low, I'm not sure of the date, in 2011. So that low connected to the February of 16 low and paralleled off the July of 2014 high. It has been a boundary line for the market now for 8 years. This is the January of 18 high. This is the September of 18 high. Now here's what we did just recently. We broke above it. Looked like a breakout. Wow, this is really something. We're really going to take off now. And what happened was we stayed around, played around there for a couple of weeks, and broke back below. Let me show you a closer picture of that, because it becomes more interesting. So here's what happened. We came down to it, and we came down to it. I pointed out that that's fine. That's an expected technical move. You break above it, you come back down to it, and then you take off again. Well, we broke back down to it, started moving up, came down to it again, started moving up a little more, and then yesterday, boom, back inside the channel. And when that happens, especially if there's follow-through like there was today, and especially if there's big downside like there was today, then you can say that this was a false breakout here. We can't say for sure yet, but it sure looks that way. It looks like this breakout was a false breakout to the upside. Now, that much having been said, let's make it clear that the advanced decline line has led the market all the way here. It keeps going to new highs, amazingly keeps going to new highs, because this is an advanced decline line of the New York Stock Exchange. The New York Stock Exchange Index, which it's based on, which measures all the stocks on the New York Stock Exchange, topped out in January of 18. That's over a year and a half ago. We've never surpassed that January of 18 high. So this is mysterious stuff going on in the market, almost unprecedented. But we're going to go through it with you together and see if we can come up with anything intelligent to say about the prospects for the market. But we wanted to show you the advanced decline line again. That's important. What we want to show you next is we were looking just a little while ago at an hourly chart. We do hourly projection charts. They're actually 65 minutes. And those hourly projection charts get very interesting. I know this is a busy chart. I tried to clear it up a little bit for you by putting on the offsets themselves rather than the fractional offsets, which is the new software, which makes it very busy. So what I did was I left the projections on from the regular software so you can see what an incredibly effective tool it is. This is not a toy, folks. Take a look at these projections here. This is going back 4 or 5 months ago. Take a look at the numbers and the projections. Downside projection here. Now this is interesting because the low end of the projection was 57.2968. Let's see what this low was right here. The low was 57.2881. So it actually went outside the projection window by less than a point. A virtually perfect projection. Now, it was a big projected area, and that's because of the difference in the offsets as you move down. But follow these projections for me and see that we're not talking about some cute little toy here. This is a very serious market tool. Here's the upside projection. What's the lower end of that? 30, 26, 34. Does anyone remember what the high was in July? The high in July was 30, I believe it was 27.98 if I can find it here. 25.89, there it is, to 30, 27.98. Just inside that projection window, and then boom. And where did the boom go to? Well, lo and behold, here is the low, here is the projection window. So another bullseye for the downside move. Now, however, we've had a significantly higher upside projection given. 3101.23, 3149.99. Now, these numbers will differ a little. You may have written different ones down from the daily charts or maybe even the weekly charts because this is more fine-tuned. This is an hourly or 65-minute chart. But this is what this projection calls for. It's a nominal 10-week projection. This is the equivalent of a 5-week offset. Here's where things get interesting. Look at what's happened the past few days. We're going to zoom in on this and show you exactly what we're looking at now. Okay, so here are the bars. I don't know how well you can see this, and I should have made them a little darker, but the hourly bars today came right down in here and played right around in this area right here. Right in this area here, okay? In order to invalidate that upside projection, you need to get below all the price points between the two offsets. So you can see these offsets are very jaggedy here, but the shorter of the two offsets is the brown line. So if you consider dynamically moving this brown line over till it meets the blue line, those are the offsets. The blue line's a perfect match about 20 periods further on. But as you can see, if you move that further to the right, we have this low area right in here. If the market goes below there, we can say that the downside projections have been invalidated. So that's the area that we're going to be watching very closely for. This is the S&P 500. Let's take a look. I'm going to pause because I don't want this video to be too long, and I don't like the pauses because a lot of times the audio sync goes out. But I'm going to pause for a second and bring up another chart for you. Okay, here's the Dow Jones Industrial Average. Here's the projection for the Dow. Again, this is a 5-week offset for a nominal 10-week projection. We broke through pretty clearly here. There's no question about this upside projection. 28,163 rounded off to 28,566 rounded off. So what has happened? Well, we went clearly gave the projection, started moving sideways, and now look what happened. Let's zoom in on this one too and see where we stand. We've already broken through the first line on the Dow. And again, remember actually the brown line is the first offset line. So just imagine moving them over. This is a dynamic thing where the offset gets moved over to the second offset. You have to get below everything in between. So on the Dow, it looks like the everything in between would be this level right here. If you move the brown line over till it matches up with a blue line, then you need to get below this low in terms of a median. Now, a couple of things could happen. If we go sideways for a few more days, even a few more hours, and then break below this particular area, that would be an invalidation. It would be a big-time invalidation of the upside projection. So that's something we're going to be watching very closely. There's a couple of other things we want to show you. Okay, we're showing you this chart for two reasons. This is the New York Composite Index closing price chart, and they're the old offsets. They're not the fractional ones, but they are 24 to 27.6 rounded off. So it's 5-week offsets for nominal 10-week projections. And to show you that projection, we simply have to go like that. That's way up there. That's a big move to the upside. Here's where the projection was given. It was pretty clear. No obstructions, no wondering whether we broke above or didn't. And now we've broken back down below. We're below one of the offset lines. What we need to do now, and we can give you specific numbers now, what we need to do is get below the lowest point between the black line and the red line. So here's the black line, here's the red line. The lowest point currently between the two of them is right at this level right here. So we can say with confidence that if the New York Composite Index closes below, let's say 12,420, that's less than 2% away. If we close below there, this upside projection has been invalidated, okay? Now, there's one other thing on this chart that I want to show you. This little mysterious animal right here, this bright green line. Does anyone have any idea what that is? It's a 200-day moving average, which, whether you're a technician or not, you look at that. I mean, even the bullishly biased fundamentalists look at 200-day moving averages. Look where we closed today in terms of the 200-day moving average on the New York Composite Index, the index that represents all the stocks on the New York Stock Exchange, virtually on that line. I mean, if you want to get technical and look at it really closely, you close a tiny bit below that green line. So this is critical territory in that respect too, and it's one of the reasons why this update is being so long, because there's so many things to show you. And there's one more thing that argues with a bullish favoritism towards it, and we're going to discuss that with you right now too. Okay. By the way, excuse the t-shirt and the whatever. This has been a long afternoon. This is kind of a stream of consciousness update. So we're trying to get you as much information as we can without going for 20 or 30 minutes. This is the last thing we're going to show you. This is a technical thing. Today, something happened that's only happened one other time in the last 80 years. And those of you that are technicians will be surprised by this, I think. Are you acquainted with the trading index, the ARMS index? The ARMS index simply measures the ratio of up and down stocks and up and down volume. When you have, on a ratio basis, more volume on the down stocks, then you're going to get a reading over 1. When it works the other way around, it'll be a reading under 1, numerically. So we have now had 12 consecutive readings on the trading index, on the ARMS index, higher than 1.0. Now you'd say, well, that doesn't sound like it's that unusual. 1.0 is kind of a neutral reading. The 12 consecutive readings that we had through today is only the second time since 1940 that that's occurred, almost 80 years. When was the other time that occurred? Well, I've got a little vertical line here to show you. It was not an exact bottom, but boy, it was a great time to be buying stocks, I'll tell you that. Look at this. This is where it occurred, and about 2% lower, and I don't know, about 2 weeks later, is where the market bottomed. Now, let's give you more perspective on that by moving back out again. Here is the occurrence. Here's the bottom. Follow this line across. I mean, we never went, up to this day, we have never gone lower than that again. There you go, up into the present day. So is that happening again now? You know, when you only have one comparison to make, it's certainly not statistically significant. So we can't make any big deal out of it, but we wanted you to know that the only other time that's happened in 80 years happened right around the area of an important market bottom. Now, If you want to be bullish, and I'm not saying I want to be, but if you want to be bullish, you can say that because we're so close to invalidating those upside projections, a lot of times the market does that. It gets very close, and those are where the bottoms occur. So we have to watch very closely over the next few days, because just another 1 or 2% to the downside would invalidate all upside projections and make a strong argument that we may have seen a much more important bottom on July 26th than most people think. So that's where we stand. I hope you got a chance to watch the special update today. We also hope you got a chance to subscribe. Bottom right, click subscribe. Anytime we do a special update, if you subscribe and click on the bell, the notification bell, you will be notified of that. Thanks a lot for watching. I'm sorry for making it so long, but we had a lot to talk about. We'll talk to you tomorrow.